You're entering CNBC-TV18's Fire Safe Studio, powered by Century Ply, now with firewall technology.
Hello and welcome to Halftime Report. Well, in the next 1 hour, Rod, we'll tell you about the markets. We'll pull in a couple of managements. We'll also focus on select stocks. But for the time being, we need to focus for the number that's flashing at the bottom of your screen. We have the WPI number. Well, it's coming at around 12.9% odd. We were working with a number of around 13.6%. Remember, on a month-on-month basis, it's up by close to around 250 basis points or thereabouts. In the previous month, 10.5%. This time around, 12.94% odd. Ekta and me will take you through the rest of the show. But for the time being, let's get in Lata Venkatesh. She's here to break those numbers down for us. Lata, 12.94%. That's flashing on the screen.
Yes, the primary point I want to make is that this is a number one should not be worried about. Okay, you may just be aghast that, oh God, it's 12.9. I mean, we're close to 13. It's lower than Ekta's poll of 13.6. But the bigger point is, one, it is coming off a very low base. Last year, same time, we were not having any economic activity, May of 2020. So at that time, it was minus 3.9, if I'm not mistaken. So a large part of this is just swinging back to normal. Even if we were at 7, we would be only about 3%, just arithmetically speaking. Now, the remaining part, the high that you are seeing, the reasons why I'm kind of reassured is the WPI best reflects global commodity prices. And as Nigel, you know better than anyone else, it's not just fuel, it's also metals and plastics that have been rising a goodish bit. So as you can see, it is manufactured products inflation, which is at 10.8%, as you can see. That's the big rise. And even that was higher even last month at 9%. Now, the representation of these manufactured goods in the CPI, remember the CPI is the mandate of the MPC, that is only 20% of the CPI core, you know, not the entire CPI. Half the CPI is food. And then in the remaining part, if you take off the other things, it's only 20% that gets impacted by metals and fuels and such stuff. So the, the passage of a high WPI into CPI is to that extent limited. I think the RBI had a number, if I forget, 1% increase impacts it by 0.2 or something like that, the WPI. Also, it impacts with a lag because it is at a wholesale level. It has to get into commodity prices and then come to the retail level, to the consumer good that you and I buy. And that usually is a 6-month lag. I'm not saying that it is good to have a big number. What I'm trying to tell you is that because of this 13% WPI number, do not expect the Reserve Bank to increase its inflation expectation. If you remember, its forecast has just been upped in the just concluded policy by about 20-30 basis points. For the rest of the year, they expect the CPI to be between 5 and 5.5%. Because of this WPI number, that will not change because the pass-through is limited and lagged. And therefore, while this is a big number, do not get perturbed that any policy hike is on the cards. The Reserve Bank continues to have the space it had when it announced its monetary policy just a little while ago, earlier this month. With that preface, okay, the WPI core inflation is at 10%. That's, of course, calculated by Informist. And among other things, vegetable index is high at 7.89. Food index is actually down month on month, and that is very important to note. Normally, as the monsoon, of course, May is not monsoon, but as the monsoon starts, there are even more supply disruptions. But anyway, for the month of May, that's not an indication. The point is, it's 0.2 down. The only commodity which actually in the whole CPI basket, food basket, that moves with WPI is sugar. So that's the only thing we should really be worried about. And remember, we are a CPI targeting monetary policy committee or a monetary policy framework. Food inflation at 8.11 is a worry. And, items like sugar and edible oils will obviously matter to the CPI basket as well. Well, that's it. That's all I have to say, that there is a low base, that that accounts for part of the rise. A large part of the rise would be metals and fuel. And the impact on CPI is extremely limited. And therefore, we shouldn't worry that there is going to be an interest rate hike anytime soon, or that the MPC's elbow room is immediately crushed. That's the point I want to make, but the expert is with me, so I'll leave it to her now. Rupa Regan-Itsuri, the chief economist at L&T Financial Services, joins us. And Rupa knows a thing or two about this transition because she was member of the Urjit Patel committee, which put in that inflation framework or inflation targeting framework. Rupa, your thoughts. 12.9 is what we have got as WPI.
Yeah, thanks, Lata. This is a staggering number. While I agree with you that this may not prompt Reserve Bank of India to raise interest rates soon because growth is currently on their radar for the right reasons, we cannot underestimate the risks of such a sharp increase in WPI inflation number. As you very rightly said, it majorly reflects the upsurge in global commodity prices, but this upsurge has been consistent since December 2020. And if you look at the composition also, across the board, all commodity prices globally have been rising. It's not just the energy, but non-energy, metals, minerals, food prices. So everywhere we are seeing a sharp uptick. So a point is that this cannot be underestimated. Now, coming to the transmission, before that I would say that even if cost push pressures have raised the manufactured product price inflation, isn't that also a strange? Because generally we say that when there is so much disruption of demand, manufacturing companies actually lack pricing power to raise prices. Despite that, if the cost push pressures have prompted them to raise prices, that means these pressures are really very, very severe. And sooner than later, that will get transmitted to CPI numbers because we have to also think in terms of the cascading effect of higher global commodity prices, especially oil, petrol, diesel, because they impact transportation costs, and that is common to everything. So sooner than later, it gets transmitted to retail inflation. But yes, we are in a very tight situation where, the second wave of COVID has been quite intense in terms of its spread as well as mortality rates. Still, there are localized lockdowns in different states, which has impacted job creation and growth very adversely. So Reserve Bank of India will definitely attach higher weight to growth recession rather than building up of inflationary pressures. But at the same time, I would like to say that they will have to closely monitor the trajectory of inflation. We cannot simply afford to keep it aside if we want to eventually return to inflation targeting framework.
Okay. Yeah, Rupa, that caution is well taken, and who is to say that things can't get even worse from the global commodity front. But what is your high in terms of WPI expectation? Because the base effect wears off now. Last May was minus 3.2. Last June was minus 1.8. So do you think this is the worst we are seeing, or do you think WPI can get even worse, get even higher, that is?
See, when you have, when you are looking at any growth numbers in a year following a recession year, it doesn't make sense to have comparison on YOY basis. Okay. One has to look at sequential momentum. And sequentially, you see metal prices and energy prices, they have risen by 56%, 67% globally. So, those numbers are very high. And now we know that, at least two countries of the globe, US as well as China, they have been doing quite well, and that has improved the demand optimism for global commodities, and that is getting reflected in those prices. So we have to very closely monitor global, inflation points rather than focusing only on our internal inflation dynamics.
Fair point, Rupa. Thank you very much for that, for alerting that things can get a little worse before it cools off, especially because two of the largest, the first and the second largest economies are in growth mode. and therefore the rise in commodity prices cannot be assumed to have peaked off at all. Thank you very much for joining us, but Rupa as well saying that the Reserve Bank will be more interested in growth at the moment, since that is the bigger casualty. I just wanted to read out the month-on-month rise for prices, which especially Nigel is interested in. Mild steel, which has a big weight, is up 3.8% on the month, 24% year on year. Basic metals up 3.2%, 3.29% on the month, 27.6% year on year. So these are the big rises that Rupa is referring to. Rubber and plastics, fortunately, are flat month on month, but that's another 13% rise year on year. Likewise, chemicals up 0.6 on the month, that is May over April, and almost 11% higher year on year. What we should be interested in really is sugar and edible oils, because those are manufactured products in the WPI, but they come in CPI as under food. So food products as a whole, the manufactured products have gone up 2% for the month and 15% year on year. Among that, and this is really going to bite, vegetable and animal fat oils, that is edible oils, up 5% on the month, 51% on the year, 51% edible oils on the year. So, I mean, we can't, this is not laughable material at all. But I merely want to reiterate that its presence in the CPI is more limited, and the RBI really would be working with the same poll that Ekta was working with, 13%. In spite of it, they gave a CPI estimate, which for the full year is only 10 basis higher, and for the coming 3 quarters, second, third, fourth quarter is up by about 20 to 30 basis points over their previous estimates. It's still within 5.5 and well within that 6% outer limit at which the MPC's hand will be forced. So given all this, this is bad for company margins, yes, especially those who have not yet passed on. But it is not going to be terrible in terms of bond markets. Maybe we want to wind this discussion by putting up the 10-year bond yield on the screen. The bond yield will more be obedient to how much RBI buys and sells in the government securities auction. I'm still waiting. Okay, there it is, 6%. So it's hardly moved the bond index. So a difficult WPI number, but within the market's expectation. Ekta's poll had said 13.6. So it's within that, and it will not be a very big pass-through to CPI. Over to you, Nigel. All
right. Thanks a lot, Lata, for taking us through all those data points. Well, for the time being, though, we'll slip into a short break. You come back, and we'll get chatting with a couple of, management. JK Paper, well, the stock has been buzzing off late. We'll get chatting with Mr. Mehta, the president and director of the company. You stay with us.